Today's question from the comments comes from Marcus. If I shut down my LLC after the IRS reversed my employee retention credit, does the debt go away? Marcus, the answer is no. And if you're relying on that idea, you're making a very expensive mistake. What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King. If the IRS took your check, the Levy King will get it back. 1-877-LEVY-KING, LevyKing.com. When the IRS reverses your employee retention credit, it reclassifies that credit as unpaid payroll tax on your Form 941. That means that the system now treats it as if you never paid those payroll taxes in the first place. Closing the business does not erase the payroll tax debt. Corporate dissolution is a state law concept. Tax liability is federal. They aren't the same thing. You can file our articles of dissolution with your state today, but the IRS doesn't care. The payroll tax module remains open, interest continues to accrue, and enforcement continues to move forward. Now, here's where it gets more serious. If the business can't pay, the IRS might begin something called the trust fund recovery penalty process. That's where they investigate who was responsible for collecting and paying over payroll taxes. They're looking at owners, officers, check signers, anyone with financial control. They're going to conduct something called a 4180 interview, where they're looking to determine, number one, who was a responsible person, and number two, who willfully failed to pay over the tax debt when it was due to the IRS. And once that is assessed, the trust fund recovery penalty becomes a personal tax liability against you as an individual. At that point, the corporation is irrelevant because you now owe the debt personally. Now, let's talk about timing. The IRS generally has 3 years to assess tax from the date a return is filed. In certain ERC situations, that window can be extended if the IRS suspects fraud. Once it's assessed, though, the IRS typically has 10 years to collect against you personally, and the closing of the business won't help at all. That means bank levies, wage garnishments, liens, and revenue officer assignments can follow you long after the business itself is gone. I've seen business owners shut down the company thinking that they hit reset. Then a year later, a revenue officer shows up at their home. The debt didn't disappear. It just migrated. So if you're thinking about dissolving your business to escape an employee retention credit reversal, just understand this. Corporate dissolution does not equal tax discharge, and the tax exposure can outlive the business itself. And for the next 10 years, they're going to be chasing you personally, not the company. The best advice I would give is this. If you received an ERC reversal letter, give us a call at 1-877-LEVY-KING. We're here to help you protect your business and resolve this the right way.